Greetings, family. This is your brother in Christ, Emmanuel Mwaka, and welcome to another valuable video where I'm going to be really teaching you on which steps to take before taking a high probability trade or even a high confluence trade on Nasdaq so that you can make profits. And this is my personal way of approaching the markets. It's not a generic way of approaching, even though I want to share a method that is quite general in terms of approaching the markets, but there's a unique way that we're going to be taking our entries that's going to give us high liquidity moments, injections of momentum in the markets. And so many of you have been asking, and I've been looking for a way to really, articulate this to each and everybody in the most clear way, in the most simple way, because that's what I want to do. So as you can see, it's already on your screens, and I just want to go straight to the point. So we're going to be starting on H1 right here, and that is our structure. Okay, so what I mean by structure, I mean your support, your resistance. So basically what I want you to do before you take a trade on Nasdaq, and of course it's going to make sense as I sum it up, but before you take a trade, I want you to go on your H1, and I want you to basically reset the chart. So to say normal viewing chart. Then you're going to highlight your support. Okay, so you're going to highlight your resistance. So you're basically going to highlight your resistance at the very same time as well. You're going to highlight your support. So basically it's going to be your highest and lowest on the chart that is visible to you, even to a child that should be visible. I'm going to be showing examples later on, but this is just laying out the foundation and the concept. So we want you to highlight the resistance, the support. Then of course you want to ask yourself this question: where is the market? Is it on support or is it on resistance? Once you have established that, then it will let you know what is or what trend is the market in. So of course, if as you have highlighted your support and the market is currently on a support, then it will let you know, of course, you're going to look for what trend is the market in. Of course, most of the time it will be in a bullish trend or either just in a simple reversal, responding to that type of support that you have just highlighted. Then now we want to go to the 15 minutes when we look for the market when it has broken key levels. And once the market is broken those key levels, we want to look forward to it retesting on those key levels so that we can get proper entries. But now this works, or I can just say it in a very simple form, that we want to trade with the trend. So your H1 kind of establishes your trend or directional bias for the day, and we're using intraday time frames in this case because we want to close our profits within the day. So then the 15 minutes now becomes a validation of the trend that you've identified on your H1. And once you've validated, and how do you validate it? In this case now, you want the market, if it's a bullish market, you want it to obviously break those higher highs and come back and retest them clearly, so that is where you're going to get your buy entry. If it's a selling market, you want the market to break those lower lows. The very same time, you want them to come back and retest. So you're going to want to wait for a pullback and a retest. So that's what we want to trade, or that's how we want to trade. We want to trade when the market is giving us opportunities to buy, which is low moments, and has given us low opportunities to sell the market, which is high moments. Hence, we say there are lower highs or higher lows. Then you want to go to your 5 minutes once you've done all of this validation to say wait for structure to be broken and retested, and that's where you want to get your entries at the lower highs and higher lows. Then you want to go to your 5 minutes where you want to check for weak rejection. Okay, of course, it's not limited to this. There are other candlesticks, but I'm just sharing just a glimpse of how we just trade. And this is going to be a good way. Other traders, they refer to these candlesticks as pin bars. Others, they may say hammer and shooting star. I can just say weak rejection. So it's not a matter of the body of the candlestick, but rather the wick that it gives us that is responding to the key level that you're on. So if the market is on a key level of a bullish trend, that means that you got to expect a weak rejection. And what is it telling you when the market actually gets to weak reject? It simply says that sellers are failing to push the market. Price is struggling, of course, to go down. Therefore, there's a lot of pressure for the buyers to actually come in, and you want to look for signs that are screaming, because candlesticks are a language of the market. You may get structure that says, this is where I'm going, it's moving, but then you want candlesticks to tell you when to really enter. Basically like indicators of a car, to say as you're driving, the next driver doesn't know exactly where you go, your next move, but as soon as you indicate whether you're going left or right, or just even if you're not indicating, that means continuation. But in this case, as we get this left or right, we know for sure that as we see rejection to the upside, that means price is struggling to push to the upside. Sellers are struggling. There's failure and there's weakness of sellers. Therefore, we're looking at, buyers coming in, of course. And then once you've established that, then you want to go to your trading session. See, I'm not wasting your time. I'm just going straight to the point. Trading session. And in this case, with this strategy, we want to really trade in the London trading session. Reason why? It's the most biggest trading session, as I've written them, that London is one of the biggest financial centers in the whole world, or in the entire world. And when you're trading the London session, a lot of traders, there's participation. And when we speak of that participation, we're speaking of sentimental analysis or sentimental trading, whereby we're looking at the overall liquidity that is caused by participants in the market. And because of so many participants, it brings about high momentum, high liquidity markets, in a market where you get Nasdaq moving so fast, and you want to basically target a lot of pips in a short space of time. Oh Lord. Okay, so I'm going to be showing you right away what do I mean by that. I had a beautiful trade here in the morning, of course, right now, just hit take profit and it just reversed. And I really want to just show you how this actually took place. So we want to go to the 1 hour time frame, and I just want to show you on how really this came about. So as I was saying, you want to go here where it says reset chart, and there we go. And I just want to show you how this markets were in the morning. Okay, so this is how I found them when I woke up around 7 a.m. in the morning in South African time. That's when I actually was just on the markets. And this is how it was. And just bring it in for us, and I'll just zoom it in. But of course, you press this reset chart, but as for a teaching, and for those who are watching on phones, I really want this to be as visible as possible. So you want to take the highest. So I'm taking my resistance. I'm taking my support. Now, I said, where is the market? The market is on resistance. So it's showing us the market here is definitely just the highest point at that moment. We're not going to be concentrating on those high points. We're concentrating on the now high point as we wake up and see the first thing in the morning, because we're trading in the London session. Okay, the London session in South Africa opens around 8 a.m. and closes around 4 p.m. Those who don't know, South African time is actually GMT +2. Okay, so then we have that resistance. I can see the trend. We've started a bearish market. So now I want to go to the 15 minutes. Okay, so we want to go to the 15 minutes, and we can definitely see that overall structure. Okay, we can definitely see higher highs, lower lows, lower highs, lower lows, lower highs. And where is the market right now? It's trying to actually create a lower high, because it has now broken that overall structure, which is for us a key level. Then again, we want to look at us entering there. But obviously, of course, that's not what I just said. We want to also go to the 5 minutes, and we can definitely see here the market gave us weak rejection on that. Even on the 15 minutes, it did give us weak rejection. Once it has given us that, we want to set our risk to what ratio. So in this case, you want to set your stop loss above structure and also give it a little bit of room. So when I mean above structure, I don't mean putting it like this. So give it a little bit of room for it to breathe. And we're just going to be using a ratio of 1:3. So in this case, I'm going to stretch it all the way there and take a ratio of 1:3. So I'm willing in this case, that means I was willing to lose 23 pips, but I was also willing to gain 70 pips. And let's just let it play out. I'm going to play it out really fast because I don't want to be wasting any of your time. And we can definitely see that how it started playing out. There was a lot of momentum that kicked in, as you saw, apart from just speed replay there, but there was a lot of momentum candles just kicking in that was just saying that within under an hour, you're able to, maintain a high confluence trading with high liquidity and just taking 70 pips in just under an hour. I mean, that is just amazing. I can just say it. It's just amazing. And it's easy. It's an easy strategy. And so many of you, I just want you to go and back test this and see how it really worked out for you, because a lot of people just want to take a strategy and go to real, and we want to arrive before we depart, in a sense of jumping the process. And the process of you back testing, it's a manufacturing phase for you to become a better trader. But a lot of us want to jump the steps and just go to a real account and start making money. Definitely money, you will make it, but you will have a problem of consistency. So we want you to actually backtest this kind of way of trading, see that you're comfortable with it, see that it works for you. And once you have identified that, then you can now go to a real account with the right risk management taking place. And I'm telling you, with you doing the very same thing over and over each and every morning, imagine having a target of about $100 each and every morning. That means you're trading within the London session, taking about estimation 50 to 70 pips, and you make that $100 within each and every morning. That means that within a week, you could have gained 500 dollars within, or in fact, let's not even speak money, let's speak percentages, 5%. I mean, just within the first week. And let's say even the whole month, you could have gained 20% of your account just by applying an easy strategy of high confluence, where you don't have to anxiously wait for a trade to get into profit. So this is my intraday way of executing trades. I hope this really helps you. Thank you so much if it does. And thank you for watching the video all the way to this point. Please do subscribe as well and like this video. God bless you.